Today we're looking at the Betashares Global Shares ETF BGBL listed on the Australian Stock Exchange. We'll go over the ETF fact sheet, including the management fee, the index the ETF tracks, dividend yield, payment frequency and the fund's performance. BGBL is an ETF provided by Betashares, who own and operate the fund. Betashares are the ones who own the underlying shares in each of the individual companies. So when we buy shares in the ETF, we buy from Betashares, who continually issue new units in an open-end fund and not the individual companies inside the ETF. BGBL tracks the solo active developed markets large and mid-cap ex-Australia index before fees. It offers low-cost access to a broadly diversified range of 1,500 developed markets companies outside of Australia. It is also exposed to international currencies, which can affect returns positively or negatively. It pays distributions, which are dividends from the ETF, at least once a year with a yield of 1%, which would equate to $1,000 of dividend income for every $100,000 invested. It has a management expense ratio of 0.08% per year, so for every $100,000 invested, it will cost $80 per year in fees, and this fee is automatically subtracted from the ETF unit price, so you won't actually see any fee transactions being taken from your brokerage account. Since BGBL tracks the developed international markets, it has a large allocation in information technology companies at 25%, followed by financials at 15% and healthcare at 12%. Real estate, utilities and materials make up the smallest percentage of the fund, under 4% each. The benefit of investing in international shares is their broad diversification across multiple industries and foreign currencies. The primary focus and returns from international shares come from capital gains, whilst providing some dividend income. Living in Australia, I always look for Aussie domiciled ETFs, as it makes tax returns easier, since I'm not technically investing overseas in the US or other countries. Instead, I'm buying shares of the Australian-based fund that own the international stocks, so there is no need to complete any W8 BEN forms for Australian taxation purposes. BGBL is domiciled in Australia, so there is no need to complete a W8 BEN form. Since inception, BGBL has had an average annualised return of 22%, which includes both capital growth and distributions or dividends. Past performance is no guarantee of future performance, but it's a good sign of improving business fundamentals continually driving each individual stock higher within the ETF. With dividends reinvested, the cumulative return becomes much higher. Reinvesting these dividends creates the larger compounding effect, exponentially increasing our returns the longer we have our money in the fund. This is the sort of approach I take investing for the very long term using ETFs, to one day live off the investment portfolio as passive income through dividends or selling down small parts of the position.